Yeah, that's always a question that comes up. My perspective is that we're probably in one of the best regulatory policy environments for Macau that we've been in since probably before the global financial crisis, when Edmund Ho was chief executive, when there was a very laissez-faire attitude in Macau. We are in the best policy environment. The concessions have been renewed. There's a lot of clarity as to what's going on in the industry. The industry's having growth, but it's reasonable growth. We don't have the hyper growth or the very volatility that we saw when the junkets were so prevalent. There is a drive to get more of a mixed tourism type of structure in Macau, and that's happening with the build out of continued non-gaming, convention business, entertainment, arenas, et cetera. So all that is happening. I don't really see the risk. There's always a risk of everything, but I don't really see a major risk coming up with respect to the government trying to clamp down on Macau. In fact, what we've seen is the opposite: loosening of visa policies, more benefits being given to Macau with respect to Greater Bay Area integration. All of these things are extraordinarily positive for Macau in the longer run. Look, I think the political risk in China, the real issue is consumer sentiment and business sentiment and confidence. I think many middle class consumers in Macau, which should really be, or in China, which should really be the driver of consumer spend, are kind of sitting on the sidelines because of the uncertainty. What China long-term needs to do really is transition much more into a consumer-driven economy, which is what most developed countries are. And slowly that'll happen, right? Slowly that'll happen, and that'll help Macau.
Vitaly, at the end of the day then, who's shaping up in the current environment as best of breed? Is it LVS? Is it Wynn, Galaxy, Melco?
So look, the sector, generally moves as a group, right? Everyone benefits. There's been a little bit of disparity over the past year. Sands has struggled a little bit this year because of all the disruption at two of their properties. That's all coming to an end later this year. So they're really set up really well for next year in terms of gaining market share. In particular, if that base mass customer starts returning more forcefully next year, which I think it will. Sands seems to be the biggest beneficiary in terms of being able to gain market share. The other operator that stands out is Galaxy, which is becoming a much larger scale operator as it continues to expand, focusing on both the premium mass and the base mass segment, turning into much more of what Sands looks like in terms of scale. So both of those operators are really set, I think, for continued outperformance, especially into next year with new capacity opening up for them. Smaller operators that are more focused on premium should continue to do well, whether it's Melco, whether it's Wynn, whether it's MGM, but I think they're going to struggle a little bit with their capacity limitations.